Hey, it's Clay at ClayTrader.com. This will be my top 10 stocks as we head into Tuesday, April 12th. This will be a technical analysis breakdown. So if you're somebody that uses charts within your trading, or maybe you're just interested in learning more about the tool of charts and how they can be used to help make good decisions as a trader, this will be a video for you. Before I get to the watch list, I first want to personally invite you to get signed up for this free live online class that I'm offering here in a couple of weeks. So if you're liking what you see here and you want to learn more about this tool, how it can and should be used to build consistency as a trader and just why it's so powerful, then certainly get signed up for the free class. If you're watching on YouTube, there's a link down in the description box you can click to sign up. Or if you're watching right at my site, there's an area on the webpage that you can click to get signed up. So just keep that in mind, and if you're liking what you see, then certainly get signed up for the free class. A couple of quick clarification points before I get to each stock here. First off, this number over here is still changing around along with the candlestick, so you're not seeing things. No need to go to the eye doctor. I like to do these videos when the market's still open for a little bit because sometimes we can capture some really interesting late day price movement. So that's the context there. Now, the market is close enough to being done for the day where everything I talk about is still going to be relevant for Tuesday, but still just wanted to point that out. And then next, I'll be using the 30-minute time frame. So for you beginners out there, what that means is that each one of these candlesticks here, as they're called, represents 30 minutes worth of time. So stock number one, VERU, what a monster mover today, no doubt about that. But what I like about it most is the very kind of anticlimactic nature of the pattern that's being formed. What do I mean by that? Well, I don't want to come across when I draw out this pattern like this is a special skill that I have or this is some sort of great discovery. In all actuality, it's the exact opposite. This is a pattern that a lot of people have seen and drawn, which is great because call it a self-fulfilling prophecy, call it whatever you want. When a lot of people are watching the same levels, wondering the same things, then that's what can happen. So the level here that, again, nothing fancy, not trying to proclaim that I have some sort of great talent, but I assure you, a bunch of people have drawn that trend line right there. So once again, guarantees? No, but is it valid to think that if the price could come up there and break to the top side of that pattern, that break in and of itself could create quite a bit of upwards buying pressure? That is absolutely a plausible thought process to have. And then the next level that a lot of people are going to be watching right there, that support level down at the $11 mark. And let me actually change that to green to represent more so the bullish dynamic of things. And then just to make this all one color, maybe easier to see, we have the resistance, we have our support, we have the big momentum move right there. We'll put the golf hole down here to make it a little bit more visual. And this would be known as the bull pennant pattern. So if you like to play bull pennant patterns, you like very volatile stocks, then this one definitely needs to be on your watch list for Tuesday. Next one, NIO, very solid day here, especially when you consider the context of how nasty it gapped down, but then ultimately did fight back upwards, and where it fought back upwards actually makes perfect sense within the context of technical analysis. So for those of you that watched previous videos, hopefully remember me talking about this $20 mark, and with the price breaking down below it, there's a foundational rule in charting which states when levels of support are broken close below, they tend to act as resistance, and you can see this rule come out right into play. So no textbook theory here, quite literally played out just like you would expect. Price bounced back upwards, and then all of a sudden, surprise, surprise, look right where the price started to go sideways, right there at that $20 mark. Now, that doesn't mean that $20 can never be broken. I'm just saying that it makes sense why the price did all of a sudden start to struggle around that area. So going into Tuesday, that'll be question number one. Can the price actually break up through and stay above that $20 mark? So keep a close eye on that. As far as important levels of support are concerned, a very important level, at least in my mind, down here at 1875. Why is that so important? Well, and I'm not saying this will occur, but just for explanation's sake, if the price were to come down to 1875 and then break down below it, what would that be doing to the price? That would quite literally be putting the price right back to that area of the chart where it just was. I mean, not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of true power, genuine strength, or anything like that. Whereas if the price comes down here and bounces around and then works its way back upwards, at least at that point, you'd have a set of lows there, you'd have lows there, and you'd have stair-steps in progress being made in the upwards direction, which is what a truly strong move is going to do, right? It's going to show signs of progress. And again, in this situation, that quote-unquote sign of progress is being staying up above that 1875 mark. And again, key level of resistance up there at 20. Next one, AMC, and it's just like NIO, so this should be pretty straight and to the point because you're going to hear a lot of the same repetition here, but same general context. Started off rough, but to give credit where credit's due, bounced up nicely. And then as expected, as I mapped out in past videos, up here around this 1865-ish area is right now presenting an area of resistance. Now, to be fair, the price is actually slightly above the area, but still it's not enough for me to consider it an official break. But 1865 will be that first key question in terms of can the price finally break above that area of resistance. In terms of levels of support, and in terms of, okay, is this a truly strong bounce? Well, in my mind, it's all about that $18 mark, because as I just talked about with NIO, if the price were to come down here and then break down through 18, at that point, that's essentially putting the price right back to where it was, which again, as I've just said, is not actually a sign of genuine power. So same general context there. Is this a truly strong move? Well, let's see if the price can show signs of progress. And again, that sign of progress at 18. Next one, HOTH, Hoth. And as a Star Wars fan, all I can think of is, Planet Hoth. But anyways, that's a side point. So once more, goes back to the whole idea of self-fulfilling prophecies. By no means am I trying to imply that my ability to draw that trend line is some sort of special skill. I think a lot of people have drawn that trend line, because a lot of people are wondering, okay, this has been a pretty big pullback here, but is this pullback the beginning of the end? Is this thing just going to collapse and go back to where it was? Or is this just simply a healthy pullback? And as a good confirmation point, then a bunch of people, because it makes a whole lot of sense, are going to be watching that trend line. So as I've said, that doesn't guarantee anything, but it certainly makes it plausible to think that if the price can turn around, get up to that trend line, and then break up through it, that break right there very well could create quite a bit of upwards buying pressure. So keep a close eye on that if you like to play breakouts. As far as pullback areas are concerned, as you're seeing here, it's been quite a while since the price went up this high, but the key pullback level, in my mind, that's very curious, is right down there at about the 95-cent mark. So we'll see if that can happen. Or again, if we want to just look for some sort of reversal and potential breakout point, that's where that trend line comes into play. Next, XELA, for those of you that like to play the penny stocks here. And same general context of NIO and AMC, meaning very, very nice move up. The one difference being this one actually gapped up, as opposed to AMC and NIO gapping down before making nice movements. This one gapped up, came back down, but overall, you still got to give credit where credit's due, because even with the pullback, it's still got a chance to build that higher base, which you now know is important, because those higher bases show signs of progress. But in this situation, 38 cents, going to be that key level that I would definitely say needs to hold, because any sort of break of 38 and below puts the price back to where it was, which you now know makes no sense within the context of, is this a truly strong move? So 38 cents going to be that key level of support. And then in terms of levels of resistance, main level to watch, going to be that pink line up there, which on my chart denotes the very well-known, very famous 200 period moving average, currently valued at the 43-cent mark. But all in all, if you like to play penny stocks, and certainly some very interesting movement here, and it's just a question of, is today the start of something bigger? Well, let's just simply see if it can actually start to show some signs of progress by staying above 38 cents. Next one, GNCA, which has been an absolutely crazy one over the past couple of days. And today, unfortunately, it's looking like everything was kind of just a little dead cat type movement, because this morning, sure, there was that big gap up, opening 30 minutes, very solid, good looking green candle, and then hit a high right there. And then after that, the brakes were put on and turned into a slow bleed. But what makes this interesting, and this is just simply for those people that can be disciplined, that can actually honor stop losses, because maybe, just maybe, some sort of double bottom here is coming into play, where the price potentially bleeds back down to this 40-cent mark and then bounces back upwards. So maybe a double bottom reversal, but double bottom bounce could be a very good risk versus reward. Not could be, it is a very good risk versus reward, but that is built upon the assumption that if you're supposed to get out, then you do get out, and you don't turn into one of these people that hold and hope. So assuming that you can operate in a professional, in a disciplined way, then yeah, that 40-cent mark does present a potential very nice double bottom reversal. Next one, CYTO, and I like this because it's got a well-defined breakout point, but more importantly, it's already shown it can move, and move very strongly, so there's no doubt about that. But now you have the pullback, which is important because it lets things take a breath. But at that point, when things are pulling back, it's always a valid concern of, oh, is this just the beginning of the end? Is this thing just going to crash, go back to where it started? And we got our answer here. No, it actually shows some signs of strength again, pulled back, which now makes it interesting, because if the price does start to head back upwards, can it break through this key breakout point right up here at $1.90? So once again, if we want to just call it one of those self-fulfilling prophecy points, that's what in my mind stands out as an interesting level. So $1.90, again, as I've said a million times, we'll probably say a million more, because I wanted to really drive it home. If the price breaks $1.90, is that guaranteed to send the price up to 210ish, 215? Of course not. But is it plausible? Does it seem possible given the setup? Yeah, in my mind, it absolutely does. If you do want to play pullbacks more so, then an interesting pullback level and key level of support right down there around $1.35. Next one, TWTR Twitter, and overall not a whole lot of new things going on, assuming you've watched past videos, because this area of resistance up here at 48.65 remains resistance. But given that we do have a little bit more data, I am going to make an adjustment to the bottom part of this channel, as it seems as though the more accurate part of the bottom area down here is right around $45. So that's really the only update I'm going to make here, is that, from a pattern perspective, it's now definitely officially a sideways channel, as the past, including today, 3 days have now shown. So it's really just a big question mark moving forward of who is ultimately going to win out of this pattern. Are the bulls going to win out by breaking to the upside right there, or the bears going to win with a breakdown to the downside? Like I said, that's the big question. But nonetheless, this is a sideways channel that I'm sure a lot of people are watching. So it goes back to the whole idea of self-fulfilling prophecy. And, whether things break out or break down, it's logical in my mind to think that you could structure some very worthwhile trade plans within either of those circumstances. Of course, first one of those circumstances needs to happen, but that's the idea of a watch list, right? To find unique patterns, to find interesting situations, and then watch them. And then based on how they move, you can structure a trade plan at that point in time. Next one, PHIO, which was an absolute monster on Friday afternoon. But with today, not as much volume, but still a nice little pattern. Plenty of eyeballs still watching it, and a couple of very well-defined levels. The main one being right here. Beautiful, beautiful breakout area at 205. So if the price can work its way upwards and then get a break up through there, then you got to think that it's a plausible thought process that could create some good upwards buying pressure, potentially carried up to the 240s, if not even higher than that. And then just from a support standpoint, very clear level down here at $1.65, as you can see, more so earlier on in the day, but the price spent some general time right around there. And even right here, last 30 minutes came down to that general area and held strong. But like I said, in my mind, the most intriguing level is not necessarily that area down there. Now, if it intrigues you, that's completely fine. I'm just saying, in my mind, if the price can get up to that level and then break up through it, I think that's a level that most people will be watching and caring about. Next one, TSLA Tesla, and a very rough day on this one. And going to go ahead and do some updates here. First update, just get this change from support to resistance. As I said at the beginning, just the foundational rule in charting, when levels of support are broken, they tend to act as resistance. You can see that played out, generally speaking, right here. Actually had a very nice bounce earlier on in the morning. And sure, the price didn't hit that red line exactly, but pretty darn close for a $1,000 stock before things got rejected back down. So keep an eye on 1010 as more so in a general area of resistance. In a more near-term level of resistance, and the level that I'll be caring about right there, that trend line right there, very well-defined level. You can see multiple times price got up around that area and just couldn't quite push through it. So as of right now, that area seems to be, generally speaking, right around the 990 mark. So watch that from a resistance standpoint. In terms of levels of support, got to scroll back here quite a bit. And the next key level of support that I think a whole lot of people will be watching, and rightfully so, right? Oh, wow, the price actually broke down through it. No, not quite yet. 975. So about 975. And what I'm looking back here are these two data points from there and there. Oh, my face is blocking that, huh? Let me squeeze in some more. There we go. These data points there and there. So keep a close eye on that. A lot of people, myself included, as somebody that trades Tesla quite a bit, will be keeping an eye on it. If 975 cannot quite hold up, the next key overarching level of support down there right around, let's just call it the 942 mark. But overall, these will be the main levels I'm watching for Tesla. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about this tool, how it can and should be used to build consistency as a trader, then definitely get signed up for the class. Like I said, it'll be in a little while, but Thursday, April 21st at 7 p.m. Eastern time, so plenty of time for you to get that onto your schedule, and hopefully I'll see you there. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to put in the time and effort to create this content, then please let me know some basic feedback. Hit the like button, leave a simple comment. Those two things go a long way in letting me know that you enjoy these, and as long as I know people are enjoying, then I have no problem at all analyzing, scanning, and building these videos that if they help you out and you enjoy them. So again, hit that like button and leave a comment, even if it's saying hi. Let me know what you traded today. Give me a smiley face emoji, but like button, basic comment, go a long way in communicating to me you enjoy them. And again, get signed up for that free class. Hopefully I'll see you there. Everybody take care. Have a good one.